obviously the presentation is going to be on leveraged ETFs for tonight. And I'm going to start with my housekeeping as far as the disclaimer. This, of course, is for educational and entertainment purposes only. I'm not a licensed financial advisor. Leveraged ETFs are very risky, etc. So just take a minute to look at this slide and, know that I'm not responsible for anything. I didn't do it. Anyway, so I thought it would be helpful to take a very close look at last year, at 2024, at how some of the leveraged ETF strategies did for the year. And I want to bring at least one really new strategy to you. And I know that Vibha Jha has been a guest speaker on with Floyd for Floyd last year, and she's also been on IBD Live. She's done a YouTube video with TraderLion. So I would imagine a number of you have either heard of her or seen her, and possibly heard some of her presentations in the past. But I want to delve into her strategy a little bit deeper as part of this for tonight. So I'm going to be looking at four different strategies, particularly. Well, Hold's not really a strategy, but I'm going to talk about that. And the idea here is not so much to compare strategies as far as which one did better than another one, per se. It's more to help you understand some of the different strategies that are out there and available. And hopefully, at the end of this, you'll have enough information to understand whether or not one or more of these might be of help to you moving forward with your trading. And if an entire strategy may not be helpful, perhaps some pieces might be. Sometimes you pick up little things as far as like how to do a particular entry or an exit or something like that, or how to apply a certain rule that can help you in your individual trading that you've picked up from somebody else's strategy or the way that they trade. And hopefully there'll be some of that as part of this too. So tonight it's going to be the buy and hold, swing trading with multiple indicators, which is sort of a combination strategy. And this is one I talked about a little bit in a previous video that I did that's available on YouTube around best strategies. But tonight I'm going to get into it in a little bit more detail. Vibha's strategy, and then the leveraged edge strategy as well. And like I said, it's not all about performance. The numbers don't tell the entire story, is why I'm getting at. When you look at a strategy and whether or not it makes sense for you as an individual, you need to consider other things. Things like, can you implement it? I mean, can you effectively do the strategy the way it's meant to be done based on when trades are supposed to happen, based on the risk mitigation that's built into the strategy, those kinds of things. Does it fit with your particular trading methodology, with your trading style? Does it make sense for you? And not every strategy is a good fit for everybody. Everybody's got a different style of doing things. So one strategy might be great for one person and terrible for another. Anyway, look at other things besides the net profit, the implementation of the strategy, your ability to spend time working with it, whether or not you can monitor effectively, etc. Can you trade at the required times that the strategy calls for? And does the strategy give you a sense of risk aversion where you can sleep at night? Or are you going to have nightmares? Are you going to be tossing and turning all night because you're worried about the strategy and what it's doing and whether or not, you could be losing a lot of money? So these are all things to consider when you look at a strategy. That and some strategies are very wide based and others are very focused. And that's part of the equation too, is the strategy flexible, meaning can you use it for more than just one symbol or for a group of symbols, that kind of thing. So a lot of things to consider. So buy and hold, this is a TradingView chart showing buy and hold from the beginning of the year. The green line is the beginning, the end of the year is yellow. One thing I want to call your attention to is that if you're using TradingView, there is a indicator in TradingView called buy and hold calculator, and it's very easy to add to your chart. But the nice thing is it's actually pretty good as far as the results. I did a calculated result to come up with a 64.4% return, the manual calculation type route. And the indicator came up with a result of, down here on the bottom left, 64.2%, let's say. So it's within 0.2% of being within the calculated result. And I don't know about you, but I go nuts over buy and hold on TradingView because I get different results from all different kinds of things. So it drives me crazy sometimes. But in any case, whoops, sorry, went backwards or forwards. I mean, uh, the buy and hold strategy had a great result for last year, 64%. But, and there's a big but, look at the max drawdown here of 42, almost 43% in the middle of the year. And then there was a couple other times when I was over 20% drawdowns. This is the big part of buy and hold in general, as far as, you don't really know what kind of risk you're going to have during the year, what you're opening yourself up to because you're just buying and holding. And the other is that, particularly with leveraged ETFs, you're usually going to see bigger drawdowns than you will with the average stock. So the drawdowns can be very nerve-wracking and can cause you a lot of sleepless nights, believe me. In any case, one trade, 64% return, not bad as far as a return and net profit. This is that combination swing strategy, and this one has two sets of criteria for the entry and a couple of different indicators it looks at for the exit signal as well. For the entry, it's looking at a bullish momentum that's going to be caused by a MACD crossover and a bullish stochastic, or instead of the bullish stochastic, you could have instead of that a 3-day RSI oversold condition with a reading below 36. So it's giving you sort of an either or type of scenario on this, which is sort of an interesting approach. It's a little bit different. The exit signal is generated by the ADX and MACD. So you're looking for a bearish crossover of the MACD. And at the same time, you've got a 21-day ADX that's above 23, which is going to basically tell you you've got a strong downtrend. So that's an interesting combination too, I think. It has a built-in profit target and trailing stop, and that gives you some risk mitigation. One of the important notes with this strategy, though, is that it says not to buy if there's any sell criteria present. And in working with this, just looking at the past year, 2024, I can tell you that that can and does happen. So I had to be very careful when I did this, looking at the individual trades and making sure that we didn't have any sell criteria at the same time we had buy criteria. This chart, I know it looks a little bit busy and there's not much I can do about that, but there are 4 indicators at the bottom of the chart. The 2 bottom ones are focused on the sell signals. So you've got a MACD and an ADX down at the bottom. And then above that, you've got 3 more indicators that are focused on the buy part of the equation. the RSI, the stochastic, and another MACD. So as an example, in the very first buy signal that we have here, we've got a bullish MACD, we've got a bullish stochastic. So we didn't have to worry about the RSI because we had the stochastic condition. And I made sure, based on the readings for the ADX and the MACD down below, that they weren't giving us signals to sell at the same time. And I did that for each of the entries on the chart here just to confirm that that was the case. But you have to do that because sometimes you'll see the bullish signal with the MACD and the stochastic up here, but you'll have a sell criteria down here, and then you have to kind of wait to get these in the clear, giving you the buy signal without the sell condition, and then do the entry. And that's what I ended up doing most of the time here. Overall, though, this gave me a 45%? Here we go. 45.3% return for the year, which isn't bad. And that's only with 4 trades across the year. The first one gave us a 4% return, 4% gain. It was only about a month long. The second one was actually a not so good trade. It entered and then immediately went into a nosedive, so to speak, but ended up with a almost 13% loss and a 16% drawdown. And that's where we got our max drawdown for the year, was in this trade. The next buy was from May until July, and this was one of the better buys of the year. And this had a take profit signal in the middle of it around June 11th. The instructions that came with this, as far as the initial author, the initial video that I saw that tried to explain how the strategy was done, really didn't get any detail as to how to handle a take profit. You know, if you should sell and wait for the next buy signal, if you should sell a partial and continue with the partial. I mean, there was just nothing with it. So I looked at the condition of the candles here, and based on the price action, decided that it still looked good, and I was going to stay in the trade. So I continued on until I got an exit signal over here, and that gave me a net gain of 32.3% for that trade, which is pretty good. The next couple of months, nothing really happened. The next couple of months were a downtrend, a brief up and back down again, and then we had another buy signal in September 11th. Same type of scenario here with a take profit in the middle of this. Same situation though. I thought the candle action, the price action looked good. Decided to just stay in the trade and continue on with it. So I did that up to a new high over here. At that point, it dropped down and I exited based on a trailing stop loss exit down here, but ended up with a gain of 22% for the trade, which wasn't bad at all. So interesting strategy, a little bit difficult, I thought, to follow because of the multiple criteria, but an interesting approach to the way it's done. I need to explain a couple of things about the strategy for Vibha here. And by the way, I didn't say this specifically, but all of these are focused on just the TQQQ symbol as far as these different strategies and what I'm doing tonight. Vibha's strategy is focused on the TQQQ, and she only has 2 buy signals. They are concrete buy signals, either on a follow-through day or based on 3 days up in a row, those being of higher highs and higher lows. And she really likes to see some kind of sign of a character change. To me, that's like volume coming in with the higher highs, you know. But you want to see that the the character of the market is changing or the character of the stock is changing to become more positive looking. And those are concrete signals or concrete buy criteria. And the reason I'm specifying that is because all of our sell signals, all of our sells are clues. They're not hard sells. In other words, if one of these things happens, she doesn't go and sell. In other words, if the TQQ is making new 52-week high and then it starts going into a pullback, she doesn't sell right away. She's looking at all of these as weaknesses that kind of give her a clue that the position that she has is becoming weaker, and she will start to gradually peel off portions of her position and sell those portions. So when I calculated that 91 or 92% gain that I talked about earlier for Vibha for the year, I had to do that based on a concrete, buy this date and sell this date, as opposed to trying to piecemeal it by peeling off pieces of her position. Trying to do it that way would be near impossible to come up with numbers, I thought, because I've got no way of knowing, is she going to sell 10% of her position or 20% or what is it going to be? So I took sort of a harder approach from the standpoint of looking at numbers. But in reality, she doesn't do it that way. She does it based on weakness, saying, hey, it's time to divest a portion of my position and gradually reduce it until there's nothing left. So these are the different clues that she uses to become more aggressive in doing that. One is that looking at the new 52-week highs, and is it going to continue on with that, or is it going to pull back? New highs and declining volume, and what's the overall market doing? One of the things that she really looks for is NASDAQ distribution days, because if there's a lot of them and then there's a pullback, she's going to definitely act more aggressively as far as maybe selling a higher percentage of her existing position. If the price gives up a 10-day moving average, if it gives up the 10-day and it does that in rising volume, that's usually a pretty good sign of weakness. If she sees 3 consecutive down days in rising volume, another good sign of weakness. Price hitting resistance and getting rejected 3 times. Think of this as 3 waves up in price. So in other words, the price goes up, gets to a high, hits resistance and comes back down, pulls back maybe 2, 3, 5%, then goes back up again, gets to about that same level, hits that area of resistance again and gets rejected and comes back down again. And then same thing again a third time. Well, after that third time up and hitting resistance and coming back down, based on her experience, she said that it's generally the case that it's going to pull back at that point, and she wants to be ready for it. And that is going to be a sign of weakness, a clear sign of weakness for her. And then a poor close and rising volume below the 10-week. She also looks at a secondary indicator, the bulls versus bears. If that goes above 60%, she feels like that's generally a good sign of likelihood of a pullback. And she also look at the general market and her other stocks. And if things are getting frothy all over the place, in other words, a lot of excitement, a lot of action, everything seems to be going up, then she might start getting more aggressive selling into strength. But generally, she won't completely exit, at least until the price drops down to the 21-day or below. And I know this looks like a little bit of a busy chart as well, but I tried to make it color-coded to make it as easy as possible, with the green backgrounds being the entries, the yellow being the signal of weakness or the clue of weakness, the red being the exits. So I'm just going to go through a few examples here to give you a sense of how this goes and how she thinks through it. But if she entered here, let's say around the beginning of January and experienced a pullback here, a break of the 10-day, sign of weakness, and then a move back up and another break of 10-day, another sign of weakness over here, she might be starting to peel back on her position size and starting to sell some of her position. All right. She'd see this drop down below the 21-day here and probably sell a little bit more at that point. If she got it confirming that it's confirmed with another close below the 21-day moving average, she might then sell the rest of her position. She'd see this 3 days up here as an example. Unfortunately, though, this is coming up into new highs as far as this third day up. So she would probably sit back and wait and see what's going to happen in the market a little bit, wait a few days before doing anything, because it's primed for a pullback. And that's exactly what happens here is it pulls back and drops down to this new low down here. Comes back up 3 days in a row again and moves up nicely following the 10-day moving average. By the way, I should have mentioned too, the green is 10-day, purple is 21-day, red is 50-day moving average on the lines. Anyway, comes back, gives up the 10-day again on weakness here. We've got a bunch of moves up in strength here to new highs, and she's going to be watching that to look for weakness with pullbacks, which luckily it doesn't do. It just continues moving up, but that's what she's watching for. And that's what happens here eventually is we get 3 days down in a row, clear sign of weakness, and on higher volume, 3 days down, and the last one is a break of the 10-day as well. So she would definitely be peeling off part of the position to sell going through this.
Question.
Moving back up again, we've got a number of days of new highs until we get up here to July 11th, where it has a huge down day, breaks the 10-day, and it's the largest down day in the entire move. So that I think would be sending alarm bells as far as her seeing weakness in the market and in the TQQQ. And I think she'd be ready to peel off some at that point. She might be trying to peel off here as this is moving up a little bit into strength. And then as this gaps down here, breaking both the 10 and the 20-day lines, she'd probably be exiting the position as a guess.
I have a question.
Yes.
When she does a buy, it's 100% of her position, correct?
Correct.
But when she does a sell, she does it incrementally.
Correct.
Gotcha. Thank you.
Absolutely. Yes. Yeah, that's what I was trying to say. If I wasn't clear with that before, absolutely. She is peeling off pieces, 10% here, 20% there, whatever. And it's really dependent on what the market's doing and what the ETF is doing, the leverage ETF is doing, and what kind of weakness she's seeing. Should be out of the position down here as we're moving down, but getting back in here on these 3 days up and looking for, so again, signs of weakness moving up. And we get a situation here where we come to a new high and we have a breakdown below the 50-day moving average, which is not good. And then we get a confirming close below the 50-day moving average. And this is where I think that she would exit the position, is that confirming close below the 50-day moving average. She'd be out of the position through this downtrend here, back in after this third up day here. And again, just looking for those signs of weakness as the stock or the ETF moves up in price, watching for weakness to peel off parts of her position. The thing that was a little bit different on this, and that was, sort of my call, but we get to a point here where we had exited the position over here, and then we had 3 days up. There were like huge gaps. And, you know, to me, I'd be very uncomfortable getting into a position after 3 gap ups like that. So I suggested maybe a 25% position as an entry and trying that to see what happens. And sure enough, the market moves back down again, pulls back. And this is where she gets her max drawdown of about 12% with this pullback here. But it starts coming back up. And I think that after it gets to about here, after these 3 days up, she'd probably be filling out the position with the other 75%. And then start looking for the weakness again as it moves up, and finally exiting over here. Again, the bottom line is it's all in and then peel back and gradually reduce the position based on signs of weakness after that. So these are not her trades. These are not the trades that Vibha made last year. She did review this. She looked it over, and she thought that everything that I had done here was very much in line with her thinking and very much captured the essence of the way she trades. So, I think it's a reasonable representation of what she does. And, you can take it from there, but it's an interesting way of trading. And I think it's pretty good based on the results that she's seen with it. She's been involved with the U.S. Investing Championship for a number of years now, and she's entered into it this year as well as a manager, a money manager for $1 million up and up type account. And through November, she was up 52.5%, I believe. But she's had some really good years and has a really good track record as far as what she's done in the market and the gains that she's seen. So you can't beat that when you see success, and it's the kind of thing you want to try to emulate and try to find parts that you can use that might improve your trading.
Hey, Gary, Floyd here. Didn't I read in one of the emails that we traded back and forth with Vibha, did I remember her saying she plans on putting out some written rules or doing something in the near future? Did I read that correctly?
Well, you might be thinking she did say that she's looking at trying to enhance her rules. She's looking for how can she improve them, make them a little bit better. That's what she's trying to do now.
Okay, good.
Okay.
Well, I think many of you that were with us remember she spoke to us about 10 or 11 months ago, and she might be a candidate for another time with our meetup. We'll see. We'll see if she'd like to do that again. Thank you, Gary.
Yeah.
I have a couple questions.
Oh, sure. Go ahead.
How long has she been doing this trading for TQQQ?
Years. She's been doing it for a lot of years. She didn't say exactly how many, but it sounded to me like it's definitely more than 5, but less than 20.
Okay. Well, yeah, it has to be less than 20. But has she ever tried incorporating where when she gets a sell signal to get out of TQQQ, instead of going to cash, she goes and hops into SQQQ and then vice versa? So she's basically, it's a light switch. You're either in one or the other, and you're virtually never in cash.
She has not mentioned that. I've never heard her mention anything like that.
Okay, thank you.
So you could ask her at some point, but I've never heard her mention anything like that. No.
How do you get in contact with her?
I guess through Floyd is probably the best thing.
Okay, thank you.
Okay. I wanted to point this out too. One of the other things that she's starting to look at more is this is a weekly chart, and at the bottom of the chart here, I have an indicator that's called distance from moving average. And I have this set right now for the 10-week moving average. So these bars, the higher the bar, the further the price is from the moving average. So this can give you an indication of when you are getting to extremes as far as being extended, your price being extended from the moving average. So there are a couple of cases here where it was very obvious that you should be looking at, based on where the bar got to down here, starting to look at selling some into strength up through this portion here. And in that last part, and I think you remember in the prior chart here, where we got up at the top here, definitely selling the strength there. Based on this indicator, it's a good tool to give you that sense of when it might be ripe for doing an offensive sell. And that's one of the harder things that I think there is in this business as a trader, is knowing when to sell into strength. Selling defensive is easy. You're selling to avoid pain. You're selling to keep the profit you've already got. But selling into strength is hard, much harder to achieve, and doing it with good timing. And this is a tool that can help you with that. The last one is the leveraged edge strategy. This one, for 5 trades, had a return of a little bit over 63%. Max drawdown of 17% versus a buy and hold of like 42%. This was the weekly edge strategy setting. Included the extra or additional indicator, the MACD, to help boost it a little bit. Had a trailing stop setting of over 35% and a prior day stop over almost 13%, with a profit target of 33.6%. So here's what it looks like. Now, this is another case where I had to kind of configure things a little bit differently than I usually do. The strategy itself, the weekly strategy, was already in a trade. It was still mid-trade based on an entry in 2023. So I took the point where we started 2024, and I used that as the beginning trade entry, even though it was a trade that had actually been entered in previously in 2023. So I used that as the starting point for the calculation, getting the return. And I ended up doing, well, I was going to do the same similar type thing at the end, but oh wait, no, I did. That's right. We were still in the trade at the end here. I ended up closing the trade out while at the end of the year, but the trade was still going into 2025. And that's what Floyd referred to earlier tonight as far as the weekly getting close to a signal for exiting. But the first trade here had a 24% return roughly from January through April. We had a cross under range exit when we would sell. We missed this drawdown here, got back in here with a new buy. This trade had a 35.5% gain until it got up to a profit target reached, and a sell and a reentry buy. And then another small, actually a 1% loss by the time it went up here to the high and came down to a cross under range exit. It's about 1% loss. And this is where we got our max drawdown, was in this, where it came down about 17%. The next trade was from here, so about September through November, I'm sorry, end of October, 5.3% gain. And then the next buy here, this is beginning of December to the close at the end of the month, and that was for about a 1% loss. So overall, like I said, about a 63% gain, 17% drawdown, and 5 trades altogether. Some of the advantages with this kind of strategy, though, is that it does work with multiple leveraged ETFs, which is nice. So this works well for not just TQQQ, but FNGU, SOXL, SPXL, UPRO, FAS, etc. Anyway, there's a number of them. It comes with settings to help you maximize the profit potential. So we've already kind of predefined some settings for you to use and try out to start with. Traders can adjust and make changes to fit their trading style because everybody's got a different style. We recommend using alerts to give you signals for when things are happening. And it's very easy to do back tests with this strategy to help make sure that number one, you've got the right settings in the first place, that you put them in correctly. And number two, to help you understand what the strategy is capable of doing and to see how it performs in different types of market environments. There's more training available at the website, leverageedge.com. It only works on TradingView. It's the only platform that you can operate this strategy on. And a number of the people in this group have been very instrumental in helping with the beta test process as far as pointing out over the past year in 2023 any kind of issues or problems they saw with it. They gave me an opportunity to fix those over the past year. I did a slide on resources too. So on any of the stuff that I've shown here tonight, if you'd like to get additional information, including the name of that buy and hold indicator on TradingView, but here are the links for it, and you can get more information. And I encourage you to look into some more of this stuff in depth. Okay. Any questions?
Gary, could you go back 3? I think it was 3 that showed the criteria, the in and out criteria, the buy and sell
For which?
for this one or for the last one.
For
It's
okay.
like 3 slides back, I think.
For this one? You mean, are you talking about here?
Yeah, that's what I'm trying to, I think so.
Okay. I don't have all the criteria up here. I was just trying to give you a
Yeah,
sense of what some of the settings were, but it's the basic TQQQ weekly setting that we use in the best setting spreadsheet.
got it. Thanks.
Sure. Any other questions?
Well, thanks a lot, Gary. I really
All right.
appreciate the presentation. And I personally have been using this strategy for TQQ and SOXL, and it's been very successful for me. I'm sold on it. But one thing I would let you know is Gary and myself and others, we're always looking for ways to improve the strategy. And if anybody is using an LTF strategy and you have come up with a way to improve it, please share it with us and we'll share it with others. One of our beta users, I believe, is the one that came up with the suggestion to use MACD as a secondary indicator, and it really does help enhance the performance. And what it does is it typically helps us avoid buying losing trades that we otherwise would have been doing.